there, business owners and entrepreneurs. Are you making costly tax mistakes without even realizing it? Every year, thousands of business owners lose money due to filing errors, overlooked deductions, and lack of tax planning. And let's be honest, navigating taxes can feel overwhelming. But don't worry, I'm here to help you avoid these mistakes and keep more of your hard-earned money. In this video, we'll cover the 5 most common tax mistakes business owners make, and more importantly, how to avoid them. Stick with me until the end, because I'll also share a bonus tip that could save you thousands on your next tax bill. All right, let's dive right into the first mistake: not keeping proper records. This is like the cardinal sin of business finances, and it's something I see people tripping over all the time. You wouldn't believe how many entrepreneurs try to wing it, thinking they can just remember everything or deal with it later. But trust me, when tax season rolls around, it's a recipe for disaster. You're scrambling through a mountain of receipts, trying to decipher months-old bank statements. It's a nightmare. Think of it like this: every single dollar that flows in and out of your business tells a story. You've got income coming in from sales, services, maybe some side hustles. Then you've got expenses going out: rent for your office space, inventory, marketing costs, that fancy new coffee machine you just to have. Keeping accurate records is like meticulously documenting every chapter of your business's financial journey. Without proper bookkeeping, you're essentially flying blind. You might think you made a killing last year, but without solid records, you could end up overestimating your income and paying way more in taxes than you actually owe. Talk about a punch to the gut. On the flip side, you could be missing out on some serious tax deductions. Deductions are like magic spells that make your taxable income disappear, and trust me, there are tons of them for business owners. Home office deduction, mileage tracking, business meals with clients. These are just a few examples of how you can legally reduce your tax bill. But here's the catch: you need proof, people. If you can't back up your claims with receipts, invoices, and detailed records, the IRS won't hesitate to deny those deductions. And if that's not scary enough, consider this. What happens if the IRS comes knocking with an audit? It's not a matter of, but you'll face an audit. And if you're caught with your pants down and no records to back up your claims, things could get ugly fast. We're talking fines, penalties, and a whole lot of stress. So how do you avoid this financial fiasco? It's actually simpler than you might think. First off, ditch the shoeboxes full of receipts and invest in some decent accounting software. The bottom line is this: keeping accurate records isn't just about staying organized, it's about protecting your hard-earned money. All right, let's talk about another mistake that makes me want to pull my hair out: mixing business and personal finances. This is a recipe for disaster, and yet so many entrepreneurs fall into this trap. It might seem harmless at first. Maybe you're just grabbing a quick coffee on your business card or transferring some funds between accounts. But trust me, these blurred lines can come back to bite you big time. Imagine this: you're staring at your bank statement, trying to figure out if that $500 charge at the electronics store was for a new work laptop or that sweet sound system you've been eyeing. Now, multiply that confusion by 100 transactions, and you've got yourself a full-blown accounting nightmare. When tax season rolls around, you're left sifting through a year's worth of mixed transactions, trying to separate the business expenses from the personal ones. It's like trying to untangle a giant knot of Christmas lights. Frustrating, time-consuming, and you're bound to make mistakes. And those mistakes can cost you. You might accidentally claim personal expenses as business deductions, which is a big no-no in the eyes of the IRS, or you might miss out on legitimate deductions because you can't prove they were for business purposes. Either way, you're leaving money on the table, or even worse, putting yourself at risk of an audit. Speaking of audits, let's talk about why mixing finances is like waving a red flag in front of the IRS. When they see a jumbled mess of transactions, it raises red flags. They start to question everything, and suddenly, you're forced to justify every single expense. And believe me, the burden of proof is on you. But here's the kicker: even if you manage to convince the IRS that your intentions were pure, they might still decide to classify your business as a hobby. And that's a whole different ballgame. Hobby income is taxed differently, and you lose out on all those juicy business deductions. All your hard work down the drain because you couldn't keep your finances straight. So, how do you avoid becoming another cautionary tale? It's simple. Separate your finances like a boss. Remember, keeping your business and personal finances separate isn't just about good bookkeeping. It's about protecting your business, minimizing your tax liability, and sleeping soundly at night knowing that your finances are in order. All right, let's talk about one of my favorite topics: tax deductions. These are like hidden treasures in the tax code, little loopholes that can save you a ton of money. But here's the thing: you gotta know where to look, and you gotta have the paperwork to back it up. Unfortunately, I see so many business owners missing out on these valuable deductions. either because they don't know they exist or they aren't keeping proper records. Let's start with the home office deduction. This one's a game changer for all you entrepreneurs working from home. If you have a dedicated space in your home that you use exclusively for business, you can deduct a portion of your rent or mortgage interest, utilities, and even your internet bill. That's right, your cozy home office just became a tax-saving powerhouse. But here's the catch. You need to meet specific requirements to qualify. The space needs to be used regularly and exclusively for business, meaning no sneaking in a quick load of laundry during work hours. Make sure you're keeping detailed records of how you use the space and what percentage of your home is dedicated to business use. Next up, we've got mileage and travel expenses. If you're constantly on the road for work, racking up miles like it's nobody's business, you need to be tracking every single trip. Keep a mileage log in your car or use an app to automatically track your business miles. At the end of the year, you can deduct a significant chunk of change based on the IRS standard mileage rate. Now let's talk about marketing and advertising. In today's digital age, you gotta spend money to make money, right? Well, the good news is that all those expenses you're incurring to promote your business are tax deductible. From Facebook ads to website design to those fancy business cards, keep track of every penny you spend on marketing. But here's the golden rule of tax deductions. You can't claim what you can't prove. All right, let's talk about something nobody likes to think about: filing your taxes. I get it, it's not the most exciting topic, but trust me, ignoring it or putting it off until the last minute can lead to a world of pain. We're talking late fees, penalties, missed deductions, and even increased scrutiny from the IRS. First things first, mark those deadlines on your calendar like your life depends on it, because, in a way, it kind of does. Missing a tax deadline is one of the quickest ways to get on the IRS's bad side, and trust me, you don't want that kind of attention. Now, I know life gets busy, and sometimes those deadlines sneak up on you. If you find yourself in a time crunch, don't panic. You can always file for an extension. But here's the thing. An extension only gives you more time to file, not more time to pay. You'll still need to estimate your tax liability and make a payment by the original deadline to avoid penalties. But even if you manage to file on time, there's still the risk of making mistakes. And let me tell you, the IRS is not known for its sense of humor when it comes to errors. One wrong digit, a misplaced decimal point. These seemingly small mistakes can lead to big problems down the line. So how do you avoid becoming a statistic? Well, first and foremost, don't wait until the last minute. Procrastination is the enemy of good tax planning. Start gathering your documents early, organize your records, and familiarize yourself with the tax forms you need to file. Okay, let's talk about one of the smartest investments you can make as a business owner: hiring a tax professional. I know, it seems counterintuitive. You're trying to save money, not spend more of it, right? But trust me on this one. Hiring a qualified tax professional can actually save you a significant amount of money in the long run. And here's why. First and foremost, tax professionals are like walking encyclopedias of tax law. They live and breathe this stuff, staying up to date on the latest changes, deductions, and loopholes that you might not even know exist. They can help you navigate the complexities of the tax code, ensuring you're taking advantage of every single deduction and credit you're entitled to. Think of it like this. You wouldn't perform surgery on yourself, would you? You'd go to a trained professional, someone with the knowledge, experience, and expertise to handle the job correctly. Well, your taxes are no different. They're complex, ever-changing, and mistakes can be costly. A good tax professional will work with you to understand your unique business needs, goals, and financial situation. They'll help you develop a customized tax strategy that minimizes your tax liability while staying compliant with the law. They're like your personal tax-saving ninjas, fighting to keep more money in your pocket. But it's not just about saving money, it's also about peace of mind. Knowing that your taxes are being handled by a qualified professional frees up your time and mental energy to focus on what you do best: running your business. No more late nights hunched over spreadsheets, no more stressing about deadlines or potential audits.
Tax season brings its share of stress and headaches. At Tax Savvy Refunds Company, we understand and we provide expert tax preparation without the hassle. You can even get a same-day refund advance up to $7,000. Never be surprised with our upfront pricing. Get your max refund and learn more about our expanding services designed to suit your personal and business needs. Call 586-393-1947 or visit us at www.taxsavvyrefunds.co.